Good morning. This is Vince Lanci. It is December 14th and Friday. Thank you for joining me. This is the Gold Fix. Today we will be discussing, among other things, if we get to it, the UBS report on gold that came out recently. Um, Yesterday's activity, which was gave me a sell signal that I chickened out on because I saw something I thought better in the S&P. I didn't have the patience for, but uh, I think gold is in trouble right now. We can get to that, and we'll talk about technicals and uh, possibly get to a report on market data that I have. Uh, Left-hand side of your screen, you see one column of my Twitter. I don't know if that's Saddam Hussein or Mel Gibson, but that's just for real-time news feeds and headlines and what have you. On the right-hand side, you can see the FX and precious metals markets, and in the middle, right down the middle, you should see uh, uh, Opportunistic Trader's site, the Insights blog, and a couple of the posts that I put up. So why don't we, first of all, we can see the gold is down. Spot gold is down $3.80. Add five to that, that's 43. So gold futures are down about $2 from the 5 p.m. close. What that is relative to the other close, we'll find out in a second as I pull up Mark. Listen to me, Mike's report on technical analysis because I don't look at the close that he does. But we're going to do that right now. What you're looking at right now in front of you, the the hold on, I'm with you. You're looking at UBS's a summary of UBS's 2019 metals report. Now, yesterday, I put this post up and put the full PDF in Script D, and apparently it was a copyright violation, and they have some Script D police, and they pulled it down. And I put it up again today, uh, uh, testing their police, and I titled it "Test," and they pulled it down. There are ways around this. I'm not advocating doing something illegal, but I've noticed as a fan of Led Zeppelin, if you're on YouTube and you put something on Led Zeppelin, it'll get flagged for advertising. You can't make money on it. But I've also noticed that other Led Zeppelin people will put up posts or videos of Zeppelin bootlegs using the word the knobs. The knobs, if you're not familiar, is an English term for not a doorknob. But it was the first name that Zeppelin used, and apparently it gets under the radar of the search algorithms. Anyway, moving on to UBS. All right, so UBS's average is 1,300. I would love to go through this report in a nice, non-polemic way, but their lack of politeness is going to make me call this what this is. It's a marketing report. This is what they give the clients to get them to buy, so that they can tell their traders to buy in front of their clients that will buy, so they can make money front running their clients. That's right. My name is Vince Lanci. My phone number is 212-223-1000. Come and get me, UBS. Okay, gold unchanged, 1,300 is their unchanged, meaning they didn't revise their thing. Silver, 1,580 down from 1,700. Platinum, 910 down from 945. Palladium, 1130 up from 1040. All analysts that are predicting a product without earnings, and metals are classic for this. You really, it behooves you to not make predictions, as I learned last year, making a prediction of 1,700. Not only do you put yourself at risk of being wrong, because it's not really tied to anything like earnings. It's tied to things like supply and demand, as well as the fact that they're usually in the hands of a few strong people who can move price at will, like palladium is a Russian dominated product. The other reason is because when you're wrong, think of things like Tesla. My target for Tesla is 500, and then Tesla goes to 300 in a day. Well, my target for Tesla can't be 300 now, so I say that the average target for Tesla is 500 for the year. Now it's November and Tesla's trading 300, and you say, well, for it to be an average of 500 for the year, we really have to go to like 1,000 in 2 days. So I'm going to say I'm going to start to step down or lower my target in ladder fashion. My target's 450, then my target's 400, then my target's 350, then my target's 300, and then they converge, kind of like an at the money option or futures converging to spot. Okay. From the report, here's a little bit of tripe for you. Gold tends to set the tone across precious metals. Wrong. It does not. Gold is not setting the tone across precious metals. Palladium is up, platinum is down, and gold is sideways, and silver is down. How is that setting a tone? That's on average. That's nonsense. Moving on. We cut our forecast for silver. You can read that later on, but that's basically the idea. What I want to get to right now is the predictions, or I'm sorry, the how wide of a berth these banks give themselves in making analytical forecasts. So, starting with the gold one labeled XAU USD Figure 3, they say for 2019, gold will have an upside of 1400. Pretty much, I think the range will be 1400 to 1200 with an average price of 1300 as a forecast. Now, uh, that I think is 200 from 1300. I think it's like 12 or 13%. So that's a 12 or 13% range for the year. Uh, that's actually not too high. As much as I want to hammer them on it, that's not too high. But it's round, and if you're coming up with round numbers, that's because it's not scientific. Uh, and you know why it's not scientific? Because you can't measure gold scientifically. And part of this post is fundamentals matter. Fundamentals don't matter. Gold is not a fundamental. The rate of change of production is the same every year or very similar. We don't have any fracking technology yet. They haven't figured out how to synthesize gold. Gold cures cancer now, apparently, but nobody cares. Um, uh, the point is, gold is about emotion, and it's about not just the emotion of the people playing in gold, but it's about handicapping the shortcomings of human beings that are handling our financial affairs. Gold is not a perfect hedge for individual risks like the risk of Brexit or the risk of aliens or the risk of this or the risk of that. But gold is an imperfect hedge for almost everything human. And you'll start to see that in headlines like in stories. You'll start to see that term. Goldman is using that term now. They're starting to say it's a portfolio diversifier. That's right, portfolio diversifier. Why is it a portfolio diversifier? Because it's denominated in dollars and it's money. So what I want to get to now is we get to the pivotal questions, frequently asked questions, or Socratic method. You ask the question to get the answer you want so you can sell the product you want. Is gold still considered a safe haven? We think gold safe haven status remains broadly intact, which is why. So, explain to me why gold goes down during emerging market and equity crises. Why did that happen from May? Uh, because gold's not a safe haven asset. Gold is a store of wealth. There's a difference. You own gold as long as you own money. It's not a safe haven. That's a hedge. Gold is a put against the dollar if you're buying gold in dollar terms. So if you own money, if you get paid in dollars, if you spend dollars, a piece of your portfolio should be in gold. Now this is going to be about active trading as well, but I want to emphasize this. We think gold safe havens have, okay. All right. First of all, they think, all right, which means they're changing their tune from something else broadly. And then the word however. The word however is used when writing posts like these or writing reports as a substitute for the word but. And but is an abbreviation for behold the underlying truth. When you say the word but to someone, everything before it is negated. So, but headlines on geopolitical risks and uncertainty are unlikely to result in sustaining gold upside. Correct. There needs to be an expectation of lasting effects on the economy. Correct. Because gold goes up during prolonged, protracted bear markets. It does not go because that are tied to dollar debasement. It does not go up sustainably because of a crisis. Brexit being an example of that. Gold went up with the dollar as a safe haven, but you just can't put 2 tons of crap in a 1-ton pickup truck. You just can't do that. Gold's not a big enough market. It's a Who concert if you're trying to get out. and exit strategies are more important than entrance strategies. You keep reading it. What factors are likely to encourage sustained investor interest? False premise. Gold is not an investment tool. You invest in something that you expect a rate of return on. To call it, I guess technically you could say, what factors are likely to encourage sustained investor? They're not investing? They may be investors, but they ain't investing in gold. You don't invest in gold. You don't invest in something that doesn't give you a rate of return. You invest in something that gives you a rate of return, or you expect to get a rate of return. This is I reject the premise. Uh, Interest in gold was limited for most of 2018. Yes, because it's been capped. Emerging tentatively only in Q4 as equity came under. Interest in gold was, yes, that's a bunch of crap. There's been interest in gold in all of 2018, folks. There's been central banks buying all year long, and it had a swoon from May to through October, high to low. That's interest. That's sell interest. Okay. So this whole post is biased towards people having interest to buy. It never suggests trading it. It only suggests buy and hold, which is nonsense. Okay. Gold should be shorted as well. Let me tell you something, folks. There was a lot of interest in gold when it was taking that weekly dive for months. That was the interest of someone who had to sell in an irrational moment. That was the interest of someone who had gold to sell and needed dollars to pay bills. Don't tell me there wasn't interest in 2018. There wasn't interest on the buy side because you couldn't get your freaking customers to buy it to bail you out of your longs. Moving on. What is the balance of risks? What kind of title is that? What we like gold's risk reward as a portfolio diversifier. Oh, there it is, portfolio diversifier. I'm done. Gold is likely to stay within a broad range. Hey, gold is likely to stay within a broad range. There are only two professions where you can get paid for not being right: weatherman and analyst. The weatherman gets paid for being right half the time. Is it going to rain? I don't know. 50-50 chance. Pay me. The analyst says gold is likely to stay within a broad range. Not even he qualifies the qualification. Broad range itself is giving yourself latitude. Okay, but is likely to stay within a broad range is like saying, if you're an options person, volatility is likely to be within a narrow range would be one standard deviation. A broad range would be five standard deviations. Gold is likely, and I'm exaggerating to take a point. Anybody who knows the math knows what I'm talking about. Gold is likely to stay within a broad range. Yes, gold is likely to stay within a five standard deviation range. I mean, what it means, it's nothing. It means nothing. Okay. Gold, it's also, we remain neutral on gold. Yeah, it's because they can't remain bullish on gold because they have producers. Anyway, we'll get into that later. Expecting prices to stay range bound with a gentle drift higher over our forecast period of 2023. Yes, they'll never be spiking higher because it's not controlled by a cartel like Russia. Okay. U.S. dollar has become a more significant driver this year, but influence of rates still matters. Okay. People can debate this all they want. Interest rates don't matter for the price of gold. Rates have gone down, yet gold has not gone up. When rates go up, gold doesn't go down all the time. That's nonsense. I believe real rates matter as opportunity cost, but opportunity cost and things fundamentals like math don't really matter much anymore. I mean, price to earnings ratio is fundamentals, and no one cares about that. The point is, the dollar. First of all, yes, rates do have an influence because SAPs trade off of rates. Okay, the dollar has become a more significant. No, it hasn't. How can it become more significant? The thing is denominated in dollars. What has become a more significant driver, as we've talked about here several times, is the dollar yuan pairing. Okay, the dollar, of course, has a more significant driver, but the euro is less important. The yuan pairing is more important. We've shown that here before. But if what do I want to call mainstream analysts gave a shit, they would do their homework. But they're not allowed to take risks because folks, what you're getting fed is lowest common denominator stuff. You're going to hear mistakes from me, and hopefully I'll be honest enough to say when I'm wrong. But if you don't take risk, then you can't make money. And these people who show you analytics that are designed to get you to give their money are so you can take risk, not them. So they don't want to take risk. They want you to take the risk for them. That's the fee-based model. Okay. So there's your gold, silver, platinum, and palladium numbers. You can look at it yourself. We are, to use a metaphor, ships, and ships take risk. A ship in a dock doesn't take risk, and that's a waste of time. But a ship in a dock, like a bank giving you recommendations to maybe buy a little dinghy from it and go out and take the risk yourself, they're not at risk. You are. Okay, so enough of that. But I did hopefully manage to include the PDF again. Uh, where did that go? I didn't mean to do that. At the bottom, full PDF right here. All right, and we'll see how long that lasts. All right, moving on. Let's go to actually the market itself. Why don't we do that? Since I've spent so much time ranting. Okay, this is a 4-hour chart for gold spot. Yesterday, I had a sell signal, or actually, I did not have a sell signal. I was front running a sell signal because we're below 1250, and I thought sold it at 1245 and a half, and chickened out and scratched because I thought I saw something better in the ES. I don't like to have more than one position on at a time. And had I been patient and waited for that 4-hour signal to come, I would have made money. So I'm trading with scared money. I think it's the end of the year, and I have to be fair with myself on that. The system is right. The operator is flawed. The point is moot. I win the car. If you know SNL, you know what I'm talking about. So gold is down. The dollar is up broadly. All right, that's the dollar is up 0.49, almost 0.5%, right there, and that is a reflection on primarily the euro. What I do want to put up, as I think people should pay more and more attention to it, is dollar versus the onshore yuan, or the renminbi. Now, you can see here the daily chart has just told you to sell it, even though I was bullish on a weekly basis. This was an alarm to sell it. But I do think that we'll come back into a range. But I have been talking for a long time about gold being in a channel relative to the yuan with that red line chart I use, and this is the breakout. Will it come all the way back to this lower channel? Uh, I think it will, but I'm not married to the idea. We could just be in a higher channel now, where it's adjusted its peg, so to speak. I do think China is exerting a much bigger control over the price of gold than it has in the past. So, what time do we have? 8:18. So you can see the markets. I want to go through today's data. I think that matters. Uh, and watch this. Again, I'm not being uh, paid for this, compensated, but I found, I think you guys know about, did I close the Koifin thing? I think I did. That's a bummer. All right. Well, it's a nice little tool. I closed it. But why don't we just go through the data this way? Um, we'll just go through it. Uh, uh, as soon as I get the page up properly. I am all thumbs today, and we're going to go through. We have a lot of data today. I'm not sure how much of it is important genuinely. Uh, Sorry, hazards of a home office and someone walking by uh, the uh, the window. Okay, so we have some data today that I think we have a lot of data. I'm not sure of how much of it is important, but I'm sure you should know what that data is. All right, so there's a deluge of data today. This is Mark Chandler's work. Uh, the most important reports are the November retail sales and manufacturing output. This is his opinion. GDP components and retail sales report have averaged zero point 0.3 through October, compared with zero point 0.4 for the first 10 months of 2017. Next week's personal income report, and next week is also the Fed. So I think that's going to be more important today. So the weekly jobless claims are among the most real-time reads on the economy. I think the takeaway you want from this is I think most of the data that comes out today will reinforce the Powell position of we're going to keep raising rates. Today is one of those days where I think data comes out and it reinforces that the economy is in good shape, and Powell says, "Aha, I told you so," and the market sells off on his concerns. Um, I think that's important to note. Let me close this window out and we'll just go right to this for a quick second. All right. Sorry about the lag today. I think my dog ate my homework. But okay, so here we have gold and yuan. Uh, let's talk about, well, we'll use gold futures today, even though there's probably a lot of lines on it. Yeah, there are. All right. So the hourly in gold is nothing. The 4 hour gave me a sell signal, but we are still above, well above 1233, which was 1236, which was the weekly breakout area. So I would think that buying dips in that area might not be a bad idea. But while you're looking at that, I will read to you some technicals. All right. If we break above 1248 and a half, 1248 and a half to 1241 are your areas for today in February gold. Uh, buying between buy against 1241 uh, and 1236 will be your level underneath that. 1233 will be your final area to buy if you're bullish. You can reverse as well if you want. On the upside, 1248 is your first level to be nervous about. And then above that, that's all part of the upsloping trend line he has. Above that, it's 1256 and change. So I would say that the market, it is a Friday, and the market does tend to reverse trends on the week on a Friday, and predominantly that would be a rally. So I don't know how, but if the data comes out as I expect, reinforcing or underlining Powell's resiliency to raise rates, I don't see how gold could rally. But that said, that's what a black swan is all about. Have a great day. My name is Vince Lanci, and this is the Friday Gold Fix.